Hello guys and girls and welcome back. It's Big John here. The at's at the bottom of the screen if you like to listen to my music. Also go check out my Instagram. Follow me up on there. I'm going to be releasing more music soon. So what we're going to be doing today is I'm going to be teaching you about the Traders Dynamic Index. That's the TDI. This is a very good indicator and one of the best indicators I have personally on TradingView that I use. You can use it on MT4 as well. I'm going to be teaching you about what it actually does and give you a little breakdown and an insight into the indicator. So I hope that this helps and we're going to get straight into it. Let's go! Okay, so as you can see on my chart right now, I have my Traders Dynamic Index. I actually have one that's right here. I'm also going to show you which indicator it is at the end and all the settings that I do have. But let's just go through the indicator first. So we're going to first start with point 1, which is the zones. So I've got an 80 zone, I've got a 60 zone, a 50 zone, a 40 zone, and a 20 zone. So this is what the zones actually mean, just in case people didn't know. I had this problem when I first started using the TDI. So what we can see here is between here and here, we're in an extremely strong bullish zone. But of course, you can be expecting a bearish rejection from this zone here. Now, when the market goes from between here and here, this means you're entering a bullish zone from here to here. Now, you've also got right here, the 50 being the trend divider. So this trend divider is showing you that from here to all the way up here is a bullish zone. And then from here to down here is a bearish zone. But we'll start from here. So from here to 40, so 50 to 40, that is a bearish zone. That means the market is entering a bearish zone. When it goes between 40 to 20, now you're in an extremely bearish zone. And of course, when it gets down to here, you're completely oversold or overextended, and the market most likely is going to reverse and start to buy, as you can see here. So now we're going to move on to point 2. Point 2 being our Bollinger Bands. So as you can see, I have a Bollinger Band right here, which is the upper Bollinger Band. I have a middle Bollinger Band, which is this one here, the yellow one, also known as the sentiment line, and I have another Bollinger Band here, also known as the lower Bollinger Band. So to help you understand what the Bollinger Bands are actually doing here for you, is there's a technique that people use. They call it the shark out of the water. They call it the shark out of the water for this reason. When the 2 moving average pops out of the water from the top side, they call it the shark out of the water from the top side, because it looks like a shark fin coming out of the water being the blue Bollinger Band right there. And then there's also another reference when they use it saying the shark out of the water to the downside. As you can see, this is like a shark fin coming out here. This is giving you an indication that the market is most likely overextended up or it has extended itself to the downside, as we can see here. What you do use is you can use this as an indication to tell you that, okay, you're most likely looking for a bearish maneuver to happen here. As you can see, the bearish sell came in here, possibly looking for a bullish buy here when this happens. Now, it doesn't mean every single time this happens, you can just buy or sell. No, it does not mean that. You still have to use any indicator with a strategy. So we have to make that clear from the beginning. It just gives you an indication to let you know that the market is now moving in a direction of a possible sell or a possible buy. And what we also have here is we have the middle yellow Bollinger Band, which is the sentiment line. It actually lets you know where the market is. So if the market, the TDI being the market, is above this band, then that shows you that the market is in an uptrend. If it's below this band, it's telling you that the market is in a downtrend. Now that is the market based on whichever time frame you're on. A TDI will look different on each time frame you go to, as it's got to read the data of the time frame you're actually on. Okay, so let's move on to point 3. So what we have here is we have a 2 and a 7 moving average. Now what happens is with the 2 and the 7 moving average, you can see that the 2 moving average changes from green to red, the 7 moving average being the white line. So this would just be like on any TDI video I've shown you previously, where you have a green line here and the white line being a 7 moving average being the red line. But on this indicator, why it's so cool and epic is that they've actually programmed it to change color for you, the 2 moving average, so it changes from green to red, telling you that the crossover has initiated. So you never get in on the first bit here, you'd get in as soon as the candle closes like this and you get in on your trade, whichever way, of course, in the correct strategy or technical analysis that you have done. Okay, so now let's move on to point 4. Now for point 4, I'm going to give you an explanation of how you use this indicator for entries and exits. So you want to look for an entry on a trade when the indicator actually comes out of the shark out of the water. So let's say it's come out from the downside here. Then you're going to want the indicator to pull itself through the yellow line, as you see it has done here, not here. So this is why it was a fake out. This is what they call in the market maker method a 22. It was a second leg within a second leg. So really it was a third leg of a W. So you can see you can come up here, comes down here, then you want the indicator to go through this yellow line. Should do it just one time, hopefully, but sometimes, as you can see, it might play about first, but you want it to go through the yellow line. Then ideally, you realistically want it to pull back through this line, but it doesn't have to do it all the time. That's up to you, what your confluences are, if you're going to take the trade or not. But as you can see here, you at least want it to pull through this yellow line once, because then it's telling you that it's pulling itself through. It's like tying itself a knot in order to create the M or the W second leg. So you can see right now it's pulled itself through, and then when it did this, this gave you an indication for entry for a trade right here. And you would have been able to take this trade all the way up here. So your trade entry was here, and your exit was right here. Let's go over to the chart. I have Pip Hunter here. I'll put a link to the video on how I use Pip Hunter with the TDI. But as you can see here, here was my trade. I would have got in right here. I would have got in right here. I would have rolled this trade all the way up to here. I would have got out on this candle here. I would have made the pips I needed to make. So as you can see, that is a method of how you trade the TDI once you're in the correct move. Once again, you have to use technical analysis. Make sure you're paying attention to the chart as well. You don't want to be buying high, nor do you want to be selling low when it comes to the chart. So if anybody wants me to go over the meaning of that, please let me know in the comments below, and hopefully in future I can make a video based on that. So another thing I'll go over here in point 5, and this will be the last point about this video, is the TDI can pick up consolidation for you. So when the TDI is ranging between this zone here, which will be the 60, and around this zone here, the 40, but you just see the TDI bouncing like this. This is telling you that the market is ranging and it's consolidated. So the TDI is actually letting you know that the market is consolidated, and you have to be careful. When it does do this, what you're looking for now is an explosive move that is due to come. Whenever the market ranges, an explosive move to the upside or to the downside is definitely going to happen. This is how the TDI works. So what we can see now is we can see the TDI has now got to this point here and then an explosive move to the downside. We go to the chart and I'll show you what I'm saying. As you can see here, look at this consolidation. So the TDI is showing us that this is consolidation, and then eventually round here. Again, this for me, 7 a.m., 8 a.m. really is London open, but around this time is London open. This is why I only trade London or New York, because you get the most explosive moves, especially if you're looking at it on a 15-minute chart. And you can see right here, there was a big explosive move to the downside. So it's telling you already from when you're looking at the build up to London that, okay, there's consolidation. There's a high chance that this pair is going to do a big breakout to the downside or the upside based on what I can see from the TDI as well. So that's great. Yeah, guys and girls, that pretty much sums it up, everything I can explain about the TDI today. People ask me in my group how I enter trades and how I know how to read the markups I give out in the section I have in my group called Charlie and the Chocolate Factory. Well, basically, I use Pip Hunter with my TDI to give me a stronger direction and confluence to say that, okay, if my markup has a safe buy entry from here or safe sell, then has the TDI crossed? Is Pip Hunter the 15-minute trend, which is this alligator baseline, or the 4-hour as well? Are they both in sync for a sell or a buy? What I mean by in sync, just quickly here. So when this market opened up here, as you can see the time, 8 o'clock round here is London. There's nothing else I would have been looking for here apart from a sell. And then as soon as this happens, you had your TDI crossover right here, you see, and I would have been able to get in here, and I would have just put a pending order myself, what I do, on my safe sell, or I would have put a pending order on my safe buy. And that's literally just like this. As you can see, the 4 hours in sync, the 15-minute got in sync. So 4-hour trend, 15-minute trend here, right here, 4-hour right here, and I would have got in a safe buy, and I would have took that all the way up here, or at least for 20 pips or whatever I'm doing. And this is how I'm managing to get more consistent with my buys and my sells. I'm using a strategy based on everything all together and the TDI. So if you want to learn more and things like that, please just follow the Discord link in the description below. Do not contact anybody that's put in a contact number, a telephone number down below, or a WhatsApp number. I don't know these people. These people are just fraudulent people. They're just trying to take your money. So if you do it, it's nothing to do with me. I've said it in most of my videos. I keep trying to say it. Please just do not do it, okay? And also, if you want to be a part of my mentorship or Starfish Prime, which is a joint company signal group I'm in, then yes, of course, you can get into that as well. Just message me on Discord and we can sort out the relevant information. So other than that, I hope you all have a great day. You know how it goes. It's Saturday. I'm going to try to get some other stuff done today as well, you know. Markets closed and that, and yeah, I'm going to keep trying to be more consistent with YouTube videos, because I see you guys and girls are loving this, and I'm going to try and knock out as much as possible just to make sure that we get these pips. So yeah, on that note, peace. Okay, so as you can see here, you just go to indicators and strategies on TradingView, and you go to this TDI here. Once you type TDI in the top right here, you just want to go to this TDI right here by this person, and you add this onto your chart. Now I'll head over to the settings that I have. So on the inputs tab for the TDI, the settings are default. As you can see here, it would still be 13 here, 34 there, 2 and 7. And then when you go to style, the only things I have changed here is the slow MA. I've changed it to white, changed it to about this thickness, left it like that, and then I've left the RSI, everything the same there. Then I've changed the levels here, so I've got 20, 40, 50, 60 and 80. I make sure that 20 is on this thickness here and it's green color, 100% opacity. I make sure 40 is a red color and it's on this thickness here. I make sure 50 is a grey color and it's on 100% opacity and thickness is about this. And I make sure 60 is on this thickness, 100% opacity, a green color. And I also make sure 80 is red and it's 100% opacity and it's on this thickness here. And you can see the plot levels, I've changed them round. So the top one is green and the bottom one is red. Now when it comes to these plot levels, what it is that it just helps you understand that, okay, when the market goes up here, it's more bullish towards this side, being the green, is why I changed it around. And once again, it's more bearish when it comes down. This is the RSI when it comes down into the red side. So it's more bullish when it goes into the green side, more bearish when it comes into the red side. It's like another trend divider with the sentiment line being a trend divider inside going past 50, a trend divider, and the trend divider down this side. So we're talking about almost 3 trend dividers. So of course this would be a very strong bullish move, and when it comes down here, it'll be a very strong bearish move.